check.
A, B, C, D, E, F, H, I, J, K, L, M, N, O, P. All right.
Perfect. All right. Little breath. It always helps. All right. 5, 4, 3, 2. We're here today on another episode of the Mobile Mailbox Money vlog here at Arizona Real Estate Investors Association, brought to you by Silvercrest Opportunity Fund. Here today with Jeff Watson, prolific private lending attorney, teaches people to become the bank. Jeff, appreciate having you on the channel today. Maybe you could just detail why you're here at the meeting.
Sure. I'm here at this meeting to talk about a very important adjustment that landlords, tired, burned out landlords, and I am one. I've been a landlord for over 30 years.
Seasoned professional.
Yeah, and so I'm a housing provider, but I'm tired of it, and I'm looking at my numbers. You know, I'm running a financial calculator, and I'm looking at my numbers, and I'm looking at the rate of return that I'm making on my equity, and I'm not impressed with the number.
So how do you pivot, given that?
So what I'm looking at is, okay, how much is my really net equity in the property? Okay, so what would I sell it for?
Sure.
Minus the closing costs, commissions, and all this stuff, minus the debt. What's my net equity versus what is my net operating income? Compare the two to find a rate of return. If it's 4%, and some of my properties were down to 4%, there's something a whole lot easier that I can do where I have less headaches. I don't have to deal with tenants, toilets, turnovers, trash outs, or termites, and I collect more money for doing less work and have less risk. And that's by seller financing it to either another landlord or to an owner occupant, and where I am the bank. I collect the payments. If I've got a little bit of an underlying mortgage, I can either wrap it or I can pay it off. I would like to just pay it off, get rid of it, so that all that cash flow is mine and mine only. And for somebody to say, well, Jeff, what about the equity? That's the question they're going to ask. You know it.
Sure.
What about my equity? What about my appreciation? Run an amortization schedule. Run an AM schedule, because if you're putting the money, if you're selling the house and financing at 9.5% interest for 360 months after you take 20% down, run that for 60 months and see how much principal was actually paid.
Absolutely.
Most of what you got was interest.
Correct.
And that's a low tax category of income with low stress, and I can travel more, I can do the things I want to do. So it's a pivot.
Absolutely.
It's a big pivot. That's what the market is screaming to do right now. And I'm going to tell you, there's factors outside of beyond my control. I can't control my real estate taxes. I can fight them, but I can't control them. I can't control my insurance premiums. I can raise my deductible, I can shop it, but I can't control those things. I can't control my contractor costs. I can't control the cost of materials. All of these things are drinking my milkshake as a landlord.
Per se.
Yeah.
Dynamic. It's important to be nimble in one's investment strategy.
Absolutely.
Most people don't know there's multiple exits in a seller finance loan.
Yes.
Maybe the backside, you could just detail quickly about what that looks like.
Okay, so that's a great way to ask that question, because picture in your mind, if you would, a 4-layer chocolate cake. 4 layers of frosting and cake. I can slice that cake this way, or I can slice that cake this way and serve it out. So maybe I'm going to slice off a portion of every payment and sell it to pay off my underlying debt, or maybe I'm going to sell off a front portion of the whole payments and keep the back end. I got choices. But the idea is for my capital to be working at better than a 4% rate of return.
Absolutely.
If my rentals are making me an 8% rate of return on my equity, I'm going to keep them. But at 4 or 5, I got to do something different.
Just another arrow in one's quiver at the end of the day. Not every strategy is going to work for every property.
At every time.
At every time.
Correct.
Absolutely. That's why we're here at AZREIA, exploring different options, taking seasoned professionals and ultimately evaluating what works at the end of the day. So Jeff, if someone were curious about what you have to offer, or if they're interested in becoming the bank, how would you approach that conversation?
That is a great question. And what I would say is reach out to the leadership of this REIA. They'll be happy to connect you with the resources that I'm providing to them. or you can just kind of like reach out straight to noschool.com, but you're going to get the better resources by reaching out to the leadership of this REIA here at AZREIA. Reach out to them. They're going to hook you up with the better resources, the more direct, get right to it with the right discounts and so on. So that's the route you want to go.
Absolutely. Well, Jeff, appreciate having you on the channel today. I'm Alden Guajardo, president of Silvercrest Opportunity Fund. AZREIA, second Monday of the month here at Venue 8600. Met Jeff at multiple real estate note conferences, from Dealmaker to Note Expo to a couple others as well.
Yeah.
So appreciate having you on the channel today, Jeff. Bam, bam, bam.
Peace. Watson out.
Yeah. Passive, really I think this massive. Stable cash flow, lavish. Hard to finance for the masses. This 14% in manufactured housing. Really, all the deals I be doing is kinda hard to keep on counting. Not really. 10% for the year. It's clear this the new way. Little competition in my arena. Need a house called Serena. Strategy so boring I didn't even mean to not remind them that there another check right behind them. 10% passive, the checks I blind them with collateral. 150 performing notes, I think I can take a sabbatical. Adaptable returns just for the year you earn. 10% passive. In bank quality notes if the market has you at all concerned. Accredited investors seeking stable returns. One day I'm low, being burned. You let it invest long term to move the world until the earn and burn the pays. Turn and earn the pay. Earn, learn the way, learn how we earn. Passive, really I think this massive. Stable cash flow, lavish. Lot of finance for the masses. This 14% in manufactured housing. Really all the deals I be doing is kinda hard to keep on counting. Not really. Finance for the masses, this 14% in manufacturing.